And of course, we're drawn to the ruble. That is one of the big movers of the morning. 29% to the downside on the Russian ruble. We know that 2/3 of their FX reserves at the Russian central bank are in G7 countries. It's going to be difficult / impossible, you can tell me, to sell those now to prop up the currency. But they have come forward with a big hike in interest rates. Where does all of this very fast-moving story around the Russian central bank, where does it leave the ruble?
Well, you're absolutely right. There are an awful lot of cross currents regarding Russia and the ruble. I think when we were thinking about the impact of the escalation of hostilities last week, we looked at that Russian central bank war chest and thought, well, that will be an opportunity for Russia to be able to offset some of the economic pain that will be upcoming. But now we've seen this freezing of foreign central bank assets. That ability to support the ruble does look significantly curtailed. And so accordingly, we have seen the ruble under significant pressure into the start of the week. Yes, we've seen the central bank trying to alleviate the crisis by hiking rates, by talking about domestic companies being forced to sell foreign currency and move it back into ruble. So there are attempts to try and stem the slide, but it does feel as though the ruble is going to continue to be the epicenter of the crisis, or at least the obvious risk factor in terms of the degree of stress in terms of the Russian financial system.
Good morning, Jeremy. You talk about stress in the Russian financial system. Obviously, another aspect of this morning's trading is the massive bid for the dollars, which has strengthened against almost every other currency out there. And part of the driver of that is concerns about funding markets generally. We've seen a widening of the FRA-OIS spread and shows there's a little bit of concern, but nothing too dramatic yet. Do you think there will be a problem in funding markets generally, or is this just a very isolated, focused on Russia issue?
Well, of course, it would be very easy to say this is just focused on a Russian issue, but clearly we are seeing once again a testing of the global financial infrastructure. Now, I think we have seen attempts over the course of the last few years to try and deal with some of those infrastructure issues in order to preclude immediate funding stresses coming through very dramatically. And we, of course, saw those funding stresses back in the early stages of the pandemic. So I think markets are mindful that there could well be some degree of liquidity squeeze. Yes, we're seeing a rush for dollars, and the dollar liquidity is definitely king. But I think markets are still feeling relatively calm in the context of the broader perspective. I think largely due to the fact that we have seen these previous funding stresses, and we've seen attempts by the central bank authorities to put in place measures relatively quickly. So I think that is assuaging immediate market fears. But nevertheless, we are just seeing a little bit of widening in terms of those funding levels as we start the week.